Good morning/afternoon/evening and welcome. Right from the first second, I want you to feel that pulse, that hunger, that ambition, that burning desire to scale. Now, here's what most people get wrong. They treat fundraising like begging. But fundraising is not about pleading, it's about proving. It's about showing that when you invest in this business, you're not throwing money into a void, you're igniting a rocket. If you want investment, not charity, you must craft your approach like a killer product pitch, sharp, agile, confident. That's exactly what we're getting into today. When most entrepreneurs step into a room with investors, they walk in with their shoulders down, voices low, almost apologetic, as if they're intruding on sacred ground. They treat the meeting like an act of supplication, as if the investor is some deity who will either bless them with capital or banish them into obscurity. That posture, that psychology, is already a losing position. Because, here's the truth, no investor owes you anything. They're not there to save you. They're there to make money. And when you understand that, you stop approaching the table like a beggar and you start walking in like a partner. Business is not charity. The second you confuse it for that, you've already disqualified yourself. The investor sitting across from you is not some philanthropist there to give handouts. They're calculating, measuring, weighing opportunity against risk. And if you cannot present your business as a compelling opportunity, you're wasting their time. Stop telling investors how hard your journey has been, how much you've struggled, how many sleepless nights you've had. Everyone in business struggles. That's not unique. The question is simple. Does your business make sense as an investment? Let's call it what it is. When you walk in begging, you've already accepted a power imbalance. You're saying, I need you more than you need me. And that energy seeps through every word, every slide, every gesture. Investors can smell desperation like blood in the water. And here's the problem with desperation. It discounts value. If you beg, they'll lowball you. If you beg, they'll push you into terms you regret signing. If you beg, you'll sell your vision for scraps. But when you shift into the mindset of an equal, everything changes. You realize that you're not just asking for money, you're offering an opportunity. You're offering access to a market, a product, a customer base, a future that investor can't build without you. You have something they don't, the execution muscle, the insight, the hustle, the innovation. They have something you need, capital. That's partnership, not charity. Think of it like this. When Apple, Amazon, or Tesla raised money in their early days, do you think those founders walked in on their knees? No, they walked in with conviction. They had flaws, yes. Holes in the business model, sure. But they radiated belief. They knew that the people with money needed them just as much as they needed the money. That's the mindset shift. Investors are not gods. They are business people. And business people respect value. So how do you build that posture? It starts with understanding your numbers. When you walk into a meeting and you don't know your revenue, your burn rate, your gross margins, you're not serious. Investors are not impressed by passion without precision. They want to know that you respect money enough to understand it. If you treat numbers like an afterthought, why should they trust you with theirs? Second, know your market. Too many entrepreneurs exaggerate the size of their opportunity, throwing around billion-dollar market slides without context. That's begging in disguise. It's overcompensation. Instead, demonstrate clarity. Show that you know the niche you're serving, the segment you're winning, the traction you've earned. Specificity beats exaggeration every single time. Third, own your vision. Investors back people who see further than they do. If your entire pitch is about what you've done, you're missing it. Show them where this business could go, what dominance looks like, why this is the right time, and why you are the right team. Paint the picture vividly. Let them feel the urgency and inevitability of your success. And most importantly, posture matters. Walk into that room with your head high. Look investors in the eye. Speak with authority. Don't shrink yourself because you want their money. Confidence is contagious. If you don't believe in the inevitability of your business, no one else will. There's a reason the world remembers the entrepreneurs who command rooms. It's not because they begged the loudest. It's because they conveyed conviction. They understood that investors are hunting for returns, and they positioned themselves as the prey worth chasing. Now, let's be practical. You will hear no more than you hear yes. That's the game. but how you interpret the no determines whether you grow or wither. The beggar takes the no personally, sulks, and loses momentum. The investor-minded entrepreneur takes the no as data. What didn't resonate? What gap did I miss? How do I sharpen my pitch, my numbers, my story? Each rejection is a rehearsal, not a death sentence. Shift your psychology. You're not powerless. You're not at the mercy of capital. You're in control of an opportunity. And here's the paradox. When you carry yourself like you don't need the money, investors chase you. When you demonstrate that this train is moving with or without them, they want a ticket. No investor wants to back desperation. They want to back momentum. So stop begging, start building, stop pleading for validation, start proving value. Walk into every room knowing you're not just there to receive, you're there to exchange. Their capital for your vision, their money for your market, their trust for your execution. That's not begging, that's business. And when you carry that mindset, you stop being the person who needs investment, and you become the person investors need to invest in. Every entrepreneur loves their idea. They fall in love with their own vision, their logo, their pitch deck, their story. And that's the problem. You're so wrapped up in your own excitement that you forget one fundamental truth. Nobody invests in your passion. They invest in proof. Proof that what you're building is not just a good story, but a business that works, a solution that customers actually pay for, and a model that can scale. Proof of value is the difference between fantasy and funding. You can stand on any stage, wave your hands, speak with all the charisma in the world. But if you don't have evidence, you're just another dreamer. And let me tell you something. Dreamers are everywhere. They come with vision boards, slogans, and big promises. Investors have heard it all before. They're not short of pitches. They're short of businesses that show results. So, what does proof of value look like? It's simple. Customers, revenue, traction, validation. Call it whatever you want. But the principle is this. Someone outside of you believes enough in your product or service to exchange their money, their time, or their trust for it. When you can demonstrate that, everything changes. The conversation shifts from convincing to scaling. You're no longer begging for belief, you're showing undeniable evidence. Think about it. When you walk into an investor's office and you say, "I need $1 million to build this app," you sound like every other hopeful in line. But when you walk in and say, "I built this app, and in the last 3 months we've signed up 0 users without spending a cent on marketing," now the room gets quiet. Now the investor sits forward. Why? Because you've shown proof, and proof is magnetic. It doesn't always have to be massive revenue. It could be early adoption, strong retention, a waitlist that proves demand, or partnerships that validate your positioning. Proof can take many forms, but it must be measurable, real, and undeniable. Numbers talk. Anecdotes don't. Here's the harsh truth. When you have no proof, you're asking someone to gamble, and investors are not gamblers. They are portfolio managers, risk mitigators. They want to know that if they put their money in, there's already momentum pushing this thing forward. Proof of value de-risks the decision. It says, this isn't theory. This is already happening. Now, let's break down why proof of value is so powerful. First, it cuts through doubt. Investors hear hundreds of pitches. Most of them are fluff. When you show numbers, you separate yourself immediately. Second, it creates urgency. If you've got traction, the investor knows you don't actually need them. You're moving already. That fear of missing out pushes them to act faster. And third, it builds credibility. Proof says you're not just an idea person. You're an executor. You're not waiting for funding to start. You've already started. That mindset is priceless. But let me challenge you here. Too many entrepreneurs think proof means perfection. They wait until everything is polished before showing their results. Wrong. Proof of value doesn't need to be perfect. It just needs to be real. If you're selling a product from the boot of your car and people are buying it, that's proof. If you're running a service manually with no fancy tech and clients keep coming back, that's proof. Stop hiding behind excuses like, "I need capital before I can prove this works." No, prove it works with what you have, and capital will follow. Remember, investors are not in the business of taking you from 0 to 1. That's your job. Their business is scaling something that's already working. If you can't push your idea into the market, test it, refine it, and get someone to pay for it without millions of dollars in funding, what makes you think you'll suddenly become capable with millions in your account? Execution is a habit, not a circumstance. And let me be blunt. Proof of value is not just for investors. It's for you. It forces you to confront reality. Are people actually willing to pay for what you're building? Is your price point correct? Does your product solve the problem as well as you think it does? Proof is feedback. Proof is truth. Proof strips away the fantasy of your pitch and shows you what's real. That's uncomfortable, yes, but it's necessary. Better to find out with 10 customers than with 10 million in funding burnt to ashes. So here's the standard. Don't tell me what your business will do. Show me what it is doing. Don't give me projections built on hope. Show me results anchored in reality. Don't pitch me with promises. Pitch me with proof. When you master that, you stop being one of the hundreds of entrepreneurs asking for money, and you become one of the few offering an opportunity. Proof turns the tables. It makes investors chase you. It makes capital inevitable. It puts you in the driver's seat because you've demonstrated the one thing every investor is hunting for: validation that this works. At the end of the day, proof of value is not about impressing anyone. It's about building a business that can stand on its own legs. The funding, the recognition, the partnerships, they all come when you can prove that what you've built has weight in the real world. Until then, it's just talk. So stop talking, start proving, stop selling dreams, start showing evidence. Because once you can prove your value, you'll never have to convince anyone again. They'll see it for themselves. One of the biggest mistakes entrepreneurs make when raising capital is thinking money is just money. As long as someone has it, they believe it doesn't matter where it comes from, what strings are attached, or whether that investor is even the right match. That mistake destroys businesses before they even get off the runway. Because here's the truth, not every investor is for you, and you are not for every investor. Alignment matters. The right money accelerates you. The wrong money suffocates you. Too many founders pitch to anyone with a checkbook. They spend months running around, desperately sending decks, scheduling coffee meetings, praying for a yes. And when one comes, they grab it with both hands. But here's the catch. Capital is not neutral. Capital comes with expectations, philosophies, timelines, and strategies. If your business and your investor don't align on those, you've just invited conflict into your boardroom. Fit and alignment start with knowing yourself. What kind of business are you building? Is it a high-growth startup designed to scale fast, burn cash, and chase market share? Or is it a steady, cash-generating company that grows slower but pays dividends? The answer matters because different investors back different models. If you're building a lifestyle business and you take money from a venture capitalist who wants a 10 times return in 5 years, you're setting yourself up for war. Your vision will clash with their expectations. They'll push you to expand aggressively, to sacrifice sustainability for speed, and if you can't deliver, they'll walk away. The reverse is also true. If you're building a disruptive tech company, but you take capital from an investor who only understands traditional brick-and-mortar businesses, they'll constantly question your decisions. They won't get why you're spending on user acquisition, why you're not profitable yet, why growth matters more than immediate cash flow. That lack of understanding slows you down, frustrates you, and in some cases kills momentum. Alignment is about shared vision. You and your investor must agree not just on the destination, but also on the journey. Are we building to sell, building to list, building to dominate a market for decades? Those are very different strategies. If you want to exit in 5 years but your investor wants to hold for 20, conflict is inevitable. If you want to grow regional and they want global, tension will rise. That's why the smartest entrepreneurs don't just chase money, they choose money. They vet investors as much as investors vet them. Think of it like marriage. You don't marry someone just because they're available. You marry because there's alignment in values, in vision, in goals. Otherwise, the very thing that should give you security becomes the source of your pain. Investors are partners. They'll sit on your board. They'll challenge your decisions. They'll influence your direction. If you're not aligned, you'll spend more time fighting battles inside your company than conquering markets outside of it. Fit also means industry understanding. If your investor knows your sector, they bring more than money. They bring networks, introductions, credibility, and guidance. That kind of capital multiplies itself. But if your investor doesn't get your industry, their money becomes dead weight. They can't open doors. They can't advise. They just sit back and demand results they don't even understand. And alignment goes deeper. It's about culture. If your business values innovation, agility, and risk-taking, but your investor is conservative, bureaucratic, and obsessed with control, you'll clash every day. If your business values impact, purpose, and long-term legacy, but your investor only cares about short-term profit, you'll constantly be pulled in opposite directions. Money without cultural fit becomes poison. So here's the question every entrepreneur should ask before signing a term sheet. Is this investor aligned with where we're going, how we're getting there, and why we're doing it? If the answer is no, then walk away, even if the check is big. Because misaligned money is more expensive than no money at all. It costs you your peace, your freedom, your vision, and sometimes your company. Now, let's flip the perspective. Alignment also means you fit into the investor's thesis. They have mandates. Some only invest in fintech, some only in healthcare, some only in early stage, some in growth stage. If you don't fit that thesis, stop wasting time pitching. Do your homework. Know who you're talking to. Walking into a room with no understanding of the investor's focus is the fastest way to lose credibility. It tells them you're unprepared, uninformed, and unserious. When there's real alignment, the relationship feels effortless. Conversations move faster. Decisions are made with trust. The investor becomes a partner, not a burden. They don't just write a check. They roll up their sleeves, they make calls, they open doors, they stand with you in tough times. That's what the right fit looks like, and here's the payoff. When you have alignment, you get more than capital. You get leverage, you get speed, you get confidence, because you know that the person backing you isn't just chasing returns. They're chasing the same outcome you are. They're not dragging you into directions you don't want to go. They're pushing you forward, aligned with your mission. That's when capital becomes a multiplier, not a weight. So stop thinking the goal is just to get funded. The goal is to get funded by the right people. People who see what you see, believe what you believe, and are willing to push in the same direction. That's not just smart business. It's survival. Because money alone doesn't build businesses. Aligned money does. Every pitch has two sides. On one side, there are the numbers, the spreadsheets, the charts, the revenue forecasts, the margins. On the other side, there's the story, the dream, the vision, the why behind what you're building. Most entrepreneurs lean too heavily on one side and ignore the other. They either drown investors in numbers with no soul, or they tell a beautiful story with nothing tangible underneath it. Both are mistakes. If you want to win investment, you need both. You need the narrative and the numbers, woven together so tightly that they cannot be separated. Think about it. Numbers alone are cold, they're sterile. They don't move people. An investor can read revenue figures in any report, but numbers don't create emotion. Numbers don't inspire. Numbers don't make someone believe. On the other hand, a story without numbers is empty. It's theater, it might inspire, but inspiration without evidence is just hot air. Investors are not here to applaud your performance. They're here to make decisions. That's why the most powerful pitches are the ones where the numbers confirm the story, and the story gives meaning to the numbers. Let me make it plain when you tell your story. Why you started, the problem you saw, the pain you're solving. You're pulling people into your vision. You're painting a picture of the world as it is and the world as it could be. That's the narrative, but immediately after, you must anchor that vision in hard data. Show me the size of the market. Show me adoption rates. Show me customer lifetime value. Show me conversion costs. Those numbers become proof that your story is not fantasy. It's grounded in reality. And when you present the numbers, don't just dump them onto a slide. Numbers are not self-explanatory. Wrap them in meaning. Contextualize them. If you say we grew 200% year on year, make me feel that growth. Translate it, that's not just 200%. That's the difference between a tiny business and a fast-moving engine. If you say we have a 70% retention rate, explain why that matters. It means customers are not just buying once. They're sticking, they're loyal, they're proving that what you've built has staying power. The narrative breathes life into the numbers. The numbers give the narrative credibility. This is where too many entrepreneurs fail. They lean into passion and vision, thinking charisma will close the deal, or they hide behind spreadsheets, thinking precision will impress. Neither works. Investors have seen both. What they're looking for is balance, the irresistible pull of a story and the undeniable weight of data. Let's go deeper. When you tell your narrative, make it personal. Why this problem? Why now? Why you? Bring the room into your world. Show them the human side of the business. Numbers speak to the brain, but stories speak to the heart. And decisions are rarely made by brain alone. People justify with logic, but they act with emotion. That's why you need narrative. It creates emotional buy-in. But emotional buy-in without financial logic is dangerous. You don't want an investor who feels sorry for you. You want an investor who is excited by the return. That's where your numbers come in. They are the foundation. They show that your dream is bankable. They transform "I believe in you" into "I will invest in you." And here's the nuance. Your narrative should lead into your numbers. The flow must be seamless. Don't throw numbers at me randomly. Build your story until the investor is leaning in, then land it with the figures that prove it's real. It's like music: tension, build, release. By the time you drop the data, the investor should already want to believe, and the numbers seal the deal. Now, let's address the trap. Many founders inflate numbers to match their story. They stretch projections, exaggerate markets, manipulate metrics. That's suicide. Investors can smell inflated figures instantly. And the moment they doubt your numbers, they'll doubt your story. The power of narrative meeting numbers is honesty. The story inspires. The numbers validate. If the numbers don't look perfect yet, that's fine. Frame them within your story. Say, here's where we are, here's where we're going, and here's the data that proves the trajectory. Investors respect authenticity more than perfection. The best entrepreneurs don't see narrative and numbers as separate. They see them as one. The narrative is the headline. The numbers are the supporting article. The narrative is the promise. The numbers are the proof. The narrative makes the investor want to believe. The numbers remove any reason not to. And let's be very clear, this is not just about raising money. This is about building a business. If you don't know how to balance story and data, you'll struggle with customers, with partners, with staff. Your team needs to believe in the story, but they also need the numbers to measure progress. Customers need to feel the story, but they also need the value to justify loyalty. The fusion of narrative and numbers is not just a pitch tactic. It's a business discipline. So the challenge is simple. Master both. Don't be the founder who only tells stories. Don't be the founder who only knows spreadsheets. Be the founder who commands both. When you walk into a room, let your story stir emotion and let your numbers anchor it in fact. That combination is unstoppable. That's when investors stop seeing you as a risk and start seeing you as a vehicle for growth. Because in the end, it's not narrative or numbers. It's narrative with numbers. That's the formula. That's the edge. That's how you turn belief into investment and vision into reality. Ideas are cheap. Everyone has one. At every coffee shop, every dinner table, every WhatsApp group, there's someone talking about the next big thing, the next app, the next product, the next breakthrough. And yet, the graveyard of business is filled with next big things that never saw the light of day. Why? Because the difference between the dreamers and the doers is execution. Investors don't back ideas. They back credibility. And credibility comes only through execution. Execution credibility is the proof that you can take an idea out of your head and bring it into the real world. It's not about what you plan to do, it's about what you've already done. Too many entrepreneurs show up to pitch with theories, projections, and hypotheticals, but with nothing they've actually built, tested, or delivered. And they wonder why investors walk away. Nobody funds potential without proof. Potential is free. Execution is what costs. Think about it from the investor's perspective. They are about to put capital, real money, into your hands. Why should they trust you? because you said so, because your deck looks pretty. No. They trust you when you show that you have already executed, that you've already faced challenges and solved them, that you've proven resilience, grit, and the ability to deliver under pressure. That's credibility. That's what separates the entrepreneur who gets funded from the one who gets ignored. Execution credibility starts small. It's not about perfection. It's about progress. If you say you're building an app, don't pitch with slides. Show the prototype. If you're starting a retail brand, don't tell me about your vision. Show me the first 100 customers you sold to. If you're running a service, don't talk theory. Show testimonials, contracts, renewals. Every piece of evidence that you've moved beyond the idea stage builds your credibility. Investors need to see that you're not just a thinker. You're a builder. But credibility goes deeper than results. It's about consistency. Anybody can have one lucky win, but do you deliver repeatedly? Do you execute not just once, but over and over again? Because business is not about the one-off. It's about building systems that produce results consistently. Execution credibility means you've shown discipline, not just passion. It means you've built processes, managed teams, handled setbacks, and still delivered. Let's be clear, setbacks are part of the journey. Every business faces them. What investors want to know is, how did you respond? Did you crumble, or did you adjust? Did you make excuses, or did you find solutions? The way you handle failure is as important as the way you handle success. If you can demonstrate resilience, adaptability, and a track record of bouncing back, you elevate your credibility instantly. Another layer of execution credibility is your personal track record. What have you done before? Have you built something, even small, and grown it? Have you managed a team, delivered on deadlines, closed sales? Investors look at you as much as they look at your business. Because at the end of the day, businesses don't execute, people do. If you can show that you've executed in the past, even outside this specific venture, you earn trust. You show that you're not just experimenting, you're experienced. And let's not ignore the obvious. Execution credibility is demonstrated in how you prepare. The way you show up to the pitch, the way you know your numbers, the way you present your market understanding. All of it is execution. If you can't prepare for one meeting, why should anyone trust you with millions? Sloppy execution in the pitch signals sloppy execution in the business. Every interaction is an audition. Every detail counts. Now, let's address the myth. Many entrepreneurs believe credibility only comes once you're successful. That's wrong. Credibility doesn't mean you've built a unicorn. It means you've proven the discipline of moving forward step by step. If you've taken an idea, launched it, earned your first customers, refined it, and kept pushing, that's credibility. Investors don't expect perfection. They expect progress. They know the business will evolve. What they need is proof that you're capable of driving that evolution. Execution credibility also comes from your team. No investor wants to bet on a solo genius. They want to see a group of people who can execute together. Have you recruited talent? Have you inspired others to join your mission? Have you built a structure where responsibilities are clear and results are delivered? A strong team signals strong execution. It says you know how to multiply effort, not just rely on your own hustle. And finally, execution credibility is about trust. Investors are entrusting you with resources. Do they believe you'll respect that trust? Integrity matters. If you're careless with commitments, if you overpromise and underdeliver, your credibility collapses. But if you're known for doing what you say, for delivering even under pressure, for owning both wins and losses, your credibility compounds. Trust is the ultimate currency in business, and execution is how you earn it. So understand this. Investors are not swayed by your ideas, your slides, or your passion. They are swayed by your ability to execute. Show them you've done it before. Show them you're doing it now. Show them you'll do it again. Execution credibility is the foundation of confidence. And when you have it, you don't just attract money. You attract the right money, the right partners, the right opportunities. Because people follow those who deliver. Execution credibility is the difference between being seen as a dreamer and being respected as a doer. Between being one more voice in the crowd and being the person investors want to back. Between chasing capital and capital chasing you. That's the game. Ideas don't win it. Execution does. Now, listen. If you leave here thinking this was just another talk, then we failed, because this is not theory. This is fuel. You've got the blueprint. Think like investors, show real value, match the fit, stitch narrative with numbers, and prove execution. Do that, then funding isn't luck, it's inevitability. Go build with audacity. Go fund with confidence. Go scale. Not someday, today.